Hi, welcome to the FinTech Times Presents series of webinars. The FinTech Times was established in 2016, and it's the global multimedia news outlet centered around the first world's leading FinTech newspaper, reporting the latest and brightest ideas from the FinTech world. So firstly, I'd like to say hello to our audience. Thank you very much for joining us. Really looking forward to your participation within this event. Today, we're going to continue our discussion of Can FinTech Save the UK Economy, Part 2. So really like it if you could follow the conversation using the hashtag FinTechs Save UK, and obviously we'd love it if you could follow us at the FinTech Times. We're going to be discussing this week's announcements, centering around CBILS. Is it failing micro businesses? Is it failing SMEs? What about this 100% guarantee that many people have been talking about? You know, there's been some newly accredited lenders. What are they going to be doing? And we really want to take as many of your questions as possible. For those of you that are joining us on the app, on the laptop or a Mac, you'll see the Q&A icon at the bottom of the screen. Please submit your questions through there. Unfortunately, if you're joining for a phone, that may not be possible. But if you also want to send some questions through on the chats, we'll be monitoring those as well, and we'll be able to put that to the panel. So we have a great group of people for today's discussion with a mix of experience, knowledge, and opinions. So I'm going to invite them all to join me on the screen. First, we actually have two of our original panelist participants for the original webinar series, which is John Davies and Simon Cureton. We also have Samantha Bamert, CEO of AskIf Finance, who are an accredited CBILS lender. We have the godfather of FinTech, Mr. Nick Ogden, and actually the Forbes contributor, Lawrence Wintermeyer, who actually referred to him as that. So what I'm going to do now is ask them, which is really quite tricky because a lot of them have got an awful lot to say. So we're trying to just do some very quick introductions, please, gentlemen. And perhaps, John, we could start with yourself.
So good morning, everyone, again. So I'm John Davis. I'm sitting here today as the chair of the Association of Alternative Business Finance. I'm also the founder of SME lender Just Cashflows PLC, but I also use my capacity as chair of the ABF to work with both the CBI, also to work with UK Finance and other associations to make sure the message of FinTechs is heard in government. And again, I'll explore more of that as we go through the morning.
Lovely, thank you. And again, one of our original founding panelists, Simon, could you give us a quick introduction?
Sure, yeah, thank you very much. My name is Simon Cureton. I'm the CEO of Funding Options. We are Europe's leading marketplace for SME lending.
Wonderful, thank you. And now for some of our new panelists and participants, Samantha, maybe you could give us a quick introduction.
Yeah, Sam Bamert, Chief Executive of AskIf Finance. We are a platform lender. We were one of the original CBILS lenders under the government's scheme. We're delighted to be here. We've focused very much on the micro SME sector and many of those small businesses that are not served by the banks tremendously well. Lovely, thanks. Thank you very much for joining us. And Nick, perhaps give us a quick introduction.
Yeah, hi, morning all. I'm Nick Ogden. I'm founder and the director of Clearbank. I'm also non-exec chairman of Funding Options, so have the joy of spending a lot of time talking to Simon. My day job is as chief exec of RTGS.Global, but that's been interrupted by the whole of this week. Whilst working with both John and Simon and others, we've been putting together a consortium to try and help SME lending.
Wonderful, thank you very much. And also Lawrence, who referred to you as the godfather of FinTech. Give us a quick introduction.
Yes, well, I'm an investment manager and I currently co-chair a not-for-profit called Global Digital Finance, which is focused on digital assets. But I'm the former CEO of Innovate Finance, the UK innovation hub for FinTechs, where I first met Nick.
Right, okay, so this is the interesting bit is, so where do we start? So I think probably the thing that I was sort of thinking of is, you know, let's have a little bit of a recap over the news over the last week for CBILS. You know, what has been happening? I know from the, you know, the UK Finance has come up with the great news that £2.8 billion has been provided to SMEs through the coronavirus lending scheme. If you check out their announcement that came out yesterday, they've also listed some amazing case studies on the website of businesses that they've supported. And this is slightly, I was saying this slightly tongue-in-cheek, but I don't mean it as a massive criticism. When you look at the companies that have been lent to, the values and the amounts, they're sort of 200,000, they're sort of 250,000 pounds. They are, you know, the smallest one on that case study, I think, is 80,000 pounds. So, you know, some initial reactions maybe from that. And perhaps maybe, should we start with Simon? Because obviously I know from previous experience, you had a lot of interest in, you know, where the applications were coming from to this, you know, lending schemes, etc.
Sure. So it's been an eventful week, I would say. So Nick alluded to certainly what we've been involved in throughout this week in putting together this consortium to propose, if you like, an alternative scheme to disseminate vital funds to SMEs, particularly the S and the M, if you like, the smaller businesses out there. I think in terms of the changes that have been made. So last weekend, we had positive announcements that the likes of Oak North were accredited. Funding Circle has also been accredited. I think from our perspective, ultimately not a lot has changed. I think that's the key thing. There was an article that went in the press where I think I referred to CBILS, or rather the announcements that the government made around you know, the 350 billion funds program for the UK. I sort of said that was a bit of smoke and mirrors. I think that, you know, I stand by that statement. I think CBILS is definitely, and the announcements that have been made, they're definitely very much smoke and mirrors. Ostensibly, the fundamental issue remains, and that is money is not getting to micro businesses. It's not getting to startups. It's not getting to smaller businesses. It's not getting to them quick enough. We still have effectively a broken ecosystem for business lending in the UK, where to the large part, the alternative lenders are still not involved in distributing funds to businesses. And that is a fundamental issue. There's a fundamental liquidity issue that I'm sure John will talk about. The ecosystem is still broken, and until decisions are made, you know, we don't see that can fundamentally change at this stage.
Wonderful, thank you very much, Simon. And Sam, perhaps you could sort of jump in there as well. Obviously, being an accredited lender from the beginning and sort of looking at that SME market, what's your sort of comments on, you know, how it was started and how it's progressed up to this point?
Look, I would say a couple of things. Obviously, when coronavirus hit and the market shut down as a result of lockdown, that caught a lot of people by surprise, and there was a lot of scrabbling to try and put something in place to really protect our SMEs. So I would not want to sit here and be negative about any of the things that have been put in place thus far by BBB or the government, but clearly, you know, trying to get things right first time round is awfully difficult, and it's very, very clear that there are still things that need to be worked on. I would echo Simon's view. I think the non-bank lenders have an incredibly important part to play. The banks, we know, have not been serving the full marketplace for micro SMEs and SMEs for many years. And certainly, you know, the financial crisis back in 2008-9 made that even worse. So why we think that the banks are the right place to disseminate funding under a new scheme in the wake of a new crisis, well, they're simply not set up to do that. And getting them to mobilise quickly is a really challenging thing. So let's leverage the non-bank lenders in this space to really play their part, and they can play an incredibly important part. The biggest challenge, I think, though, that the non-bank lenders face, I mean, we are obviously accredited, which is fantastic, and we are delivering as quickly as we can. The biggest challenge we face is through the very expensive capital that we're seeing in the private markets. Obviously, cost of capital has gone up in the wake of the crisis, and we don't have access to the Bank of England's funding schemes that have been specifically set out to benefit banks that are lending under CBILS. So we've got the term funding scheme that the Bank of England announced, but unless you're a bank, you can't access it. They're delivering capital, wholesale capital at 0.1% to the banks. I'm seeing capital being delivered and made available to me and to our organisation in the sort of high single digits in terms of percent, and that's just cost of capital. And some funders are still saying they want double-digit returns, which is frankly bonkers, given that it's backed by loans that are guaranteed under CBILS. So we really need to fix that. We really need to do something, and I think there are some very, very simple ways that we can fix that without actually any cost to the government, and that's very important.
Okay. I think this is a really tricky one to sort of come to the next sort of person, that, because I know everyone's got a lot to say about this. But John, perhaps you could give us a little bit of your sort of viewpoint up until that point, because I know you've got some other interesting stuff to share from today. But
right. Okay, so hot off the press, as they say. So I just come off a 1.5 hour webinar with Parliament. So we had about 50 or 60 MPs, Lords, and the great and good of the country sitting on that. This is part of the APPG, where this the all parliamentary group around fair bits banking, and the whole CBIL piece was being discussed, not just CBIL, but the whole part. I mean, on that panel, we had Keith Morgan, the CEO of the British Business Bank, Patrick McGee from the same British Business Bank, Stephen Jones, UK Finance, my friend Charlotte from Innovate Finance, and Stephen Hadwell from Finance Leasing Association, amongst others. So great and good. Not quite sure what I was doing there, but certainly I was on that one as well. And what I can say in short summary is, having made the point to them very succinctly that this is not working because all the following reasons you just said, we actually got them to say, you know what, you could be right. Actually, we think this is a problem. We think, because I talked about not only the distribution, this is a distribution issue. You know, despite pointing fingers and blaming people, is the fact that the high street banks, the people who have got the funds to lend, are not digitally capable. They don't have the ability to do that. They're also hamstrung in many ways of doing it. Whereas the fintech sector, as we know, does just that. It has technology. So they were talking about 5-hour queues in call centers. We don't have call centers. We just process the applications coming through. So there was a big education part on us from both, to be fair, Charlotte and Stephen Hadwell of Finance Leasing Association, and Stephen Jones of UK Finance, to press home the real need for non-bank lenders, the fintech sector, to play their part. I did a piece around the analogy of Dunkirk and the fact that the small boats had a big part to play, and here are the small boats, and that's going to be running as a story. Hopefully you could pick it up on yours, because all I can say is, I know they're now admitting the fact that they need to look at this differently. And I know that Nick would be able to add more to that as well, because I've been working with Nick on a number of these things. So I've been working with the CBI all of last weekend to try and get them to try to teach people this is how it works, really. Not how you think it works, really, this is how it works. How could we have several 100,000 people, first of all, inquire about CBIL, but there'll only be 36,000 applications? The average loan is said £180,000. We ain't serving the smaller ones. It's just not happening. And how can they see success when only 36,000 businesses out of potential 1 million or more businesses need funding? So therefore, again, there are a lot of sort of what I call self-congratulatory. Haven't we done a great job? And let's say, not really. You know, sort of. Yeah. We need to think about this again.
It's a very interesting point, as you say, and this is definitely not meant as a government or a BBB bashing exercise, because we all know, you know, well, and I'm sure Lawrence will allude to this later, and myself working a little bit in government. Government works at a glacial pace. And to actually see them change something within a matter of weeks and months, it's unheard of, completely unheard of. So, you know, we do have to give them a little bit of credit that actually they are moving, in their eyes, exceptionally fast.
They are listening. The key thing is they've suddenly hang on and are listening, which is what we needed.
Yeah. Okay, and Nick, maybe you could sort of like expand on that a little bit. Obviously, you know, you've been heavily involved in the fintech sector for a long period of time. You know, your battle to get Clearbank up and running as a sort of like a digitally built bank, understanding all the complexities of the banking system. You know, that's half of the problems that we've got here, really, isn't it?
Yeah, I think two things. Like, just to step back a second, I think it's important to recognise that no politician in the UK, or no CEO of any business or small business or operator of any type of business was ready for what's basically hit the country. I think that, you know, we just got to all work together and try and dig our way out of this. And John, I think the Dunkirk analogy is very good. Well done for that. To put where we are into context, I got some data from some of the central banks over the last 24 hours. In Switzerland, they've helped 110,000 firms and lent 16.5 billion Swiss francs. In France, they've helped now over 200,000 firms. Over a week ago, trying to get the current data from Spain was somewhat difficult. They'd helped over 44,000. And I think that that sort of shows the level of distribution which those countries have been able to engage, which the UK hasn't. And one of the things I think that's been missed in this is the current government since 2010 has been highly active in promoting the fintech sector. They've created the whole market that we all operate in today. And many of the people watching this program are only in business because of the changes in regulations and the approach to fintech and financial deregulation, which the government has supported and pushed through. There's a Bank of England report that came out a little over sort of 8 weeks ago that explains that the whole lending has shifted over the course of the last 10 years away from the big banks to the alternative lenders for small to medium-sized businesses. And yet the distribution channel, I mean, we believe from work I've done with Simon this week and with John, that we've got north of 167 lenders that could help in this distribution. And I think that it's vitally important that there's approaches taken to try and spread out the number of people who can process loan applications. Going back to the point that Sam made, liquidity is absolutely critical in this. And although the chancellors announced, eye-watering numbers, I mean, 330 billion for CBILS, that's all well and good, but that money has to move. And the issue is how to move that effectively and safely with an audit trail from HMT out to the lenders. And during the course of this week, we believe we put together a process which deals with that. And we'll see, but we have to work together. There's no one solution that's going to work better than anything else. It's a concerted effort across industry. We're not excluding any of the big banks from anything we're doing. They're welcome to join it. What we're saying is that by managing the distribution flow and also having a coordination on the liquidity and capital distribution, we can all start to address this problem much more quickly.
Yeah, I think that's the key thing that I saw from that is that, we have to be in this together. This is not a solution that one person, one company, one CEO or anybody like that can actually done. It needs to really be a group effort and an embracing of that. I was going to come to Lawrence a little bit now, because obviously, Lawrence, you've worked with the government. You've worked, as previous CEO of Innovate Finance, lobbying for, greater access for fintechs into the government services, etc. What sort of comments have you got on how the current government will be interacting with various different entities?
Well, thanks again for the invite. And, this is the most difficult job I think I've had this week, following this preeminent panel and trying to, add some sort of value to the discussion. So just to echo a few points. One, why and how this has happened is certainly not the point in time to apportion blame. And what's extraordinary, again, given everyone from Dr. Fauci years ago on 60 Minutes to Bill Gates, the experience with SARS, what's clear is something has systematically failed around the world. So it isn't a point of time in saying, look, this isn't right. And then equally, I think as a number of guests have mentioned, government, governance, nor banks are particularly designed for this level of crisis. This is a pandemic, and we have seen one back in 1918, but we seem to have forgotten about it or certainly haven't planned for the impact. And again, I think a number of governments have had this in their risk register and have been, focused on it, particularly since SARS, but for whatever reason, we've not paid too much attention to that. So nothing in modern society is designed to stop, to tell everyone to go home, to shut small businesses, and to tell everyone to down tools, other than essential health workers and essential workers to keep things ticking over. And so What I do find extraordinary, and nobody wants to banks are doing exactly what bank legal governance and operating models set them out to do following the last crisis, which is maintain their balance sheets. And again, I would echo a lot of the comments, but I don't know why we're looking at banks to get money to micro businesses. Simon mentioned, look, it was broke before, the COVID-19 crisis came about. We've been trying to fix it for the past 10 years. And again, Nick's point, this is one of the antidotes of fintech offered post-financial crisis. But the fact of the matter is, I still find it unacceptable speaking to government policymakers who don't accept. We have a tsunami. We have a health crisis that's created a financial crisis that is now creating a humanitarian crisis in parts of the Western world. Let alone what we might see emerging in sub-Saharan Africa or places that rely on WHO funding. And so I don't think, sure, we have to work together, but the idea that somebody has to sit down and say, gee, we've just taken all of the liquidity out of the system and stopped everything. We're really going to have to think about why we shouldn't be lending to you and not guaranteeing money. And, can't you, if you're the citizen in the country, you're not covered. You're going to have to spend your savings or your pension. And if you're a small business, well, guess what? We're sorry, we told you to shut, but here are the credit terms. And, if you're not credit worthy, we're not going to give you money. I mean, it just seems absolutely absurd that we're focusing on precedented measures in business as usual when everybody thinks and communicates that we've got this unprecedented time. So I laud this particular group, and again, listening to John this morning, I'm glad they're listening. I mean, but boy, what does it take to get people to listen to this? What I will say is that it highlights, certainly out of all of the work that all of the good FinTechs have done, and on the back of the CMA, that FinTech is working, and the government is really, loves to promote FinTech, but clearly doesn't understand what job it can do in the economy.
Absolutely.
And so quite often it does take a crisis to really wake everyone up. Hopefully this will be the one that says, hey, we've just spent the last decade creating an industry to service this particular problem. Just turn the damn thing on and stop talking about how we treat things in normal times. We are not in normal times.
Yeah, it's a really interesting subject, and I think the concept of putting in criteria and using all of those existing mechanisms, the existing application processes, and all this stuff. Why use existing processes? This is I'm not going to say the word that everybody says, but these are different times. We need different solutions to this. I was just going to bring...
I just have to add, Mark, and just one more thing, really. Again, everyone on this panel will know, and as well, optics is the word I think that's been used on our watch post-spin, how important it is to get the message right to the public. And so this is ironic in the non-Alanis Morissette way. This isn't like rain on your wedding day. Taxpayers bailed out banks all around the world after the financial crisis. In the US, if you look at TARP, QE, and now the very banks that are getting the money with either the CARES Act, PPP, or CBILS are trying to bail us out, and it's not working. That doesn't look good. It doesn't look good either when we're bailing out billionaires who are shareholders in risk structures because we think that's more important than small businesses. We're discriminating now against things. And, again, I'm a capitalist here. I'm trying to productively work with the system, but I really do think we need to pay attention to how the public is looking at this, or we're going to end up, with some great political volatility if we don't fix this and get the liquidity to people.
Yeah, I think that's true. I think we'll get to some of the questions that are coming in. Please keep your questions from the audience coming in as well. Let's sort of, I think, one of the comments has been made is that, we need to stop talking about banks because I don't think they're going to be part of this bit of the solution that we need. So let's think about, and I was going to ask this to Simon, let's think about you know, the micro SMEs, the SMEs, and in particular, sort of the liquidity of your lenders. Being a marketplace, obviously you see that from both sides. So what would your comments be on, you know, where's the liquidity and where's the solution need to be?
Yeah, so I think it's, just to reiterate my earlier point, you know, ecosystem is something I've mentioned a lot this week. And, you know, this isn't about bank bashing or public body bashing in any way. You know, what was announced very, very quickly was seriously positive. It was fairly decisive. I think it's the execution now that people are thinking, maybe we didn't give that enough consideration. I think if you go back 3 to 4 weeks, you know, I remember seeing a picture on LinkedIn with all of the big banks around the table with Rishi Sunak. Interestingly enough, Funding Circle were around the table as well. But if you look at the people who were around the table, that pretty much told you everything in terms of the thought process and the thinking at that time. Execution since then has clearly shown a need for a rethink. So we've clearly seen really significant demand. So demand has shot through the roof during March, and it's actually continued to be high during April. So from a demand perspective, you know, very good, very positive. More than £1 billion worth of loans were channeled, or loan applications were channeled through Funding Options platform in March. But it's how do we satisfy that demand with supply? And we work with all of the big banks, we work with the challengers, we work with the neos, we work with all of the alternative lenders. But our primary lenders are the non-bank lenders. And due to the liquidity issues, we've seen a 90% drop in lending, and that happened within days. It was fairly catastrophic. So, you know, we were dealing with this enormous demand, but there was very, very little supply. I'm actually quite interested in Sam's experience with CBILS to understand how much demand Ask are seeing, given, I guess, the demographic from a business perspective that Ask normally serve. Because the other thing that's clear to me as well, and again, it's not about bashing anything. Ultimately, we want to bring the whole ecosystem, all lenders into the fray. But one of the things that's missing with CBILS, and one of the things that broke it, is that there was no centralized triage, signposting, or advice service to guide businesses when the panic set in, that would say, right, actually, okay, you're this kind of a business, you need to be talking to Barclays, that's fine. You're a micro business, go and talk to Sam at Ask. You know, there was none of that. So you had hundreds of thousands of businesses that effectively rushed at the platform or rushed at the scheme, and they broke it straight off the bat. So it's no wonder that the distribution has been such a challenge. We want to see the full ecosystem brought in. And in an ideal world, and I think John mentioned this point earlier on, CBILS for me is a great way to whack a square peg into a round hole, right? CBILS has a very firm structure with a huge set of documentation that sits behind it and a good lot of subjectivity. So guess what's going to happen when you get that? It's not going to be, you know, high volume, efficient issuance of funds, in my opinion. We need to be bringing the rest of the lender community in, and we need to let them do what they do best, using their infrastructure without telling them how they need to change to fit something that allows the powers that be to say, oh, you've ticked that box, oh, you've ticked every single one of those boxes, we're now happy. Let them do what they do best.
You must have read my mind, Simon, because the next person I was going to go to right after you was Sam. So Sam, yeah. So let's give us a bit of information there.
I'll give you. I'm going to answer lots of questions actually on this. Lots of questions have been raised. First one on the signposting, Simon, you're absolutely spot on. You probably know that when CBILS went live, the government had their British Business Bank had their website that sort of said, we've launched a scheme. They launched the scheme, by the way. I think they announced it at 9 o'clock in the morning on the 23rd of March. We actually got information about what we needed to implement at 4 a.m. that same morning. So it's no surprise that it just didn't work immediately. Okay, so that's the first thing. And then you compound that with the fact that, of course, you've got a lot of desperate SMEs who are really, really wondering what on earth to do, as soon as the scheme was announced, they went onto British Business Bank's website. It says, speak to our accredited lenders. There's a list of 40 accredited lenders with no guidance whatsoever as to who to call. So we had to put in place very, very quickly a really, really effective filtering mechanism. Will we have got it right? Almost certainly not. But when you're faced with thousands of applications and you just don't have the capacity to deal with that, that's what you end up doing. So the British Business Bank, we did feed back to them that actually providing a little bit more guidance on which lenders are providing services to which types of businesses would be helpful, and they've taken on board that feedback, and it is improving. And of course, organisations like Funding Options are doing a great job as well. But there's still more to be done. We find for a lot of the SMEs that contact us, you know, a lot of them are applying and they simply don't meet our criteria. We're a micro business lender, so if you come to us for a £200,000 loan, we can't help you. You know, it's that sort of thing. The other thing I would just comment on in terms of the scheme, we do have to remember that this is a loan scheme, CBILS. It's designed to be a loan scheme, and the features of a loan scheme are that you have to pay it back. So, you know, we've had a lot of SMEs, micro SMEs going, I have a funding crisis. The thing that I am being told to go after is CBILS, when actually debt is not the right thing for them at all. So, you know, we are sort of berating the banks and we're berating the process. But when you're faced with guidance from the government that says the borrower has to pay this back, only come to us to reclaim under the guarantee if the borrower can't pay you back, so we are obliged to go after them in the first instance, then of course there is a process that has to be gone through to ask the borrower how they're planning to pay you back. It's simple, you know, simple lending. So I think what's very interesting is if you want to get money to businesses quickly, and you want to do so in a way that gets rid or alleviates some of those checks and balances, then actually you're much better off using a forgivable loan scheme where actually all you're required to look at is what that money is being used for, and then it effectively becomes essentially a grant, but a targeted grant to cover very specific business needs. Our big worry with the SMEs, the micro SMEs we're dealing with, is we have organisations coming to us and we know that if they take loans of a certain type and a certain size, they're going to end up so over indebted that they come out at the end of the crisis actually worse than when they went in, like by quite some margin. And that's not going to give them the tools and the firepower that they need to properly underpin the recovery of our local communities and our economy. So, you know, this is a thing, as I think, Simon, you used the term round peg, square hole. I wrote an open letter to the Chancellor and used exactly that same phraseology because, you know, we are trying to solve something with something that's not quite suited. Loans have a really important part to play, and CBILS, in the way that it's constructed, has a really important part to play, but it has to be, you know, it has to be given to the right SMEs for the right reasons, and there need to be other forms of capital available to SMEs when that loan is not the right thing for them. I'm just as an aside, by the way, I should say, you know, we talk about CBILS not being straightforward. It's not straightforward, and that's one of the challenges we have. We've had an updated FAQ document through from BBB today on CBILS, explaining how various elements of it work. And this is just the FAQs. It's not the actual guidance notes. And this in and of itself is 37 pages long. So it just gives you a sense of, you know, this is, you know, we have to use the right tools for the right things. It's an incredibly important scheme that we need to deliver effectively with the right funding through the right organisations with the capacity to deliver. And that's where the non-bank lenders play an incredibly important part. And it's FinTechs, yes, but it's also the community-based lenders, the CDFIs, who are, you know, have that human touch element that is also incredibly important. One of the points that I made, I was on a call yesterday with some various people that I probably won't mention, but yesterday, saying that one of the great advantages of the diversity of provision in the non-bank sector is that businesses can get the level of support that they need that's suited for them. And when you're looking more at the micro lender side of things, the CDFIs, because they actually combine the tech with a human element to the engagement, not only does that deliver the funding that these businesses so desperately need, but also it provides real reassurance, which goes to deal with and address the mental health issues that we're seeing a lot of small business owners are suffering with as a result of the stress coming from the crisis.
It's really, really valid points, I think, and I think we'll all agree on that sort of thing. Is that, and hopefully we're getting a bit of chance to touch on it later. CBILS is not the only answer as well. You know, it's not a question of putting all our eggs in one basket and hoping that will work. I don't know, Nick, if you would comment. Obviously, you know, you're working. I say you, Clearbank and Fund Options are working on a thing. I don't know if you've got an actual name for it at the moment, and you're getting lots of different lenders involved. What's the different types of lenders that you're getting involved in that sort of scheme?
Yeah, no, I'm going to leave the naming to Lawrence. He seems to be quite good at that. I think that going back just a second to what was being said, it's essential that a bank's involved in this. What we've got to do, the lenders do a great job. They know how to lend money. They know how to process those lending applications. They know how to do that at scale, and they are experienced at doing that job. You know, they clearly need a 33-page FAQ to help them do that. You know, that's the world that we're in. The scheme that we put together is very simple, and the PRA, the Bank of England, the FCA, all the regulators are aware already of what we're trying to do, as is HMT. And what we've said very simply is, look, root some money, agree how much money you're going to put into this scheme, call it 5 billion, whatever the number they want to do. We've got to start somewhere, all right? Agree that money is going to go into a scheme, and we will channel that money via Clearbank. Clearbank is not a competitor with the existing banks in the UK. It's a very, very niche transactional bank. Most of our customers are regulated businesses, so this is just business as usual for them. We are in the process, I think we got to 20 odd accounts open with lenders yesterday, Simon, and the aim is to have 50 of lenders with accounts open within Clearbank, hopefully by Sunday, if not more. And effectively what happens is, once the funding is made available, we know that funding is good because it's coming directly to us from Andrew Bailey at the Bank of England. We then can distribute that funding as the loans get approved by the lenders instantly. We're part of the faster payment scheme, so we can enable lenders either to make those payments straight off the Clearbank platform, or we can add in some friction and that money will go back to the lenders and then they can make the payment out. And we put in the return path because, as Sam pointed out, this money isn't a grant, it's got to be paid back. We put in the return path so that the lenders will then effectively repay back the collections that they make to Clearbank, who will then remit that back to the government coffers over a period of time. Now, by doing that, by putting Clearbank in as an independent bank who's not involved in the clutter of lending, right, gives us a neutral core position to support all of the 167 or more lenders that need to do such a vital job in supporting the industry. The open questions that exist around what we're discussing are how much of that lending should be guaranteed. There is a mood, and I know John will talk to this, and Sam will, I think, as well, that 100% guarantees is not actually the best news. It might make a good headline, but it might not be the best news. We've suggested that the French model, which is 90%, may make more sense, right? But the point of that's just on the periphery of this, because the businesses have got to have confidence that through this, they're going to get through. And the point Sam made about being able to repay these loans is vitally important. It's vitally important because it's not just the businesses that have got to repay these loans, it's the economy that have got to repay these loans. Because coming off the back of the medical disaster is an economic tsunami like we have never seen before. And there is going to have to be some concerted discussion amongst the G7/G20 in relation to deciding whether there's going to be some sort of forgiveness for some of the government money that's been used to support the various economies around the world against an unprecedented medical disaster. All right? That comes later down the path. But in relation to where we are today, we need to get funding out to businesses to keep them going. And as I pointed out in a conversation earlier this week to somebody at the Treasury, we will all be very, very upset if the coffee shop, sandwich bar, nail bar, I don't use that, but that was an example, have all disappeared from the high streets when the social distancing gets removed. All of the things that we relied upon, all of the things that made our lives so complete have just evaporated from the high street.
I agree with that. I don't know, John, if you want to just come in on that quickly to comment off the back of that.
Yeah, thankfully I gave up hairdressers quite some time ago. So let's tackle the piece around the guarantees first, because it's a real hot topic and a lot of polarized views on this. But I'm going to give it to you in a pure commercial terms. So if we as a company just cash flow borrowed funds and decided we were not going to repay them, I went into a corporate pre-pack or pre-administration or any of those particular pieces to avoid our guarantees, it would be a huge challenge for us, both in investment in our brand and all things that we do. So it's very difficult. If you are a MOT garage, and I'm not saying MOT garages called Car and Budget or whatever, and you take in 10 or 20 or 30,000 pounds and there are no guarantees to it whatsoever, come September, October, and you think, you know what, do I really want to pay this, or shall I drop Budget and Scarpa, my MOT business, and tell you what, I put a different name above the MOT business? Would it affect my business? Not at all. Is the reality of commercialism. And I'm not saying, you know, people would do it, but the reality is, if you're faced against it and you've got no skin in the game, what on earth is going to stop you? So therefore, there has to be skin in the game for all of the participants. The government has to have skin in the game, the lender has to have skin in the game, and the borrower has skin in the game. Then therefore, everybody's interests are aligned. So this thing about 100%, they think because it's 100%, suddenly it'll all go faster. No, completely got that wrong. So therefore, that's why I just want to make that clear point. So therefore, and again, a wider point around this. So, you know, I'm working with Nick, I'm working with Simon, and we talk about the other 100 odd lenders. We are a commercial lender. The big difference I'm seeing now is the collaboration between the fintech players. I'm fighting equally as well for, I walk over with Christoph, I've had 3 or 4 conferences with him, Capital Tap, all these guys, you know, literally are, you could perceive as competitors in the market, but we're all seeking and trying to find a way for the greater good of the fintech sector. And that's really coming out right now. So, and again, I put all my weight behind Nick in what he's doing and Simon in what he's doing. This morning, we were at the government piece I put forward. We called it the one-man service for business, which was a personal name we've been using for a while, and the need to take up Sam's point to not just talk about lending, but also what other grants are available, what other forms of finance, do you qualify for a SEIS, you know, EIS, all those other investment pieces as well. Are there, you know, sort of angel investors out there? So we need to think about signposting. There is going to be a pro-COVID industry, a country. So we need to think about how we're going to be supporting those businesses afterwards. We need to think about how do we save those businesses today, but also how do we protect those entrepreneurs, but how do we keep them with skin in the game for the protection of all of us? Can I just answer very quickly one of the questions that just came in as well from a guy called Rushy down here? Just to answer his question. His question was, how do the funds come to lend in the CBIL? It doesn't. That's the whole huge issue. You have to lend your own money, and that's it. And then if it goes wrong, you can claim back from the government somewhere down the road. That's the whole issue around here is liquidity. That's the big thing that Nick has been working on over the last week, with obviously him and myself trying to put that together. So, Nick, if you want to talk about that liquidity again, because it is critically important to what we're trying to achieve here.
I think just before we moved on to that, I was going to come to that exact point as well, and perhaps bring Lawrence into this as well to refer back to his conversation on optics. You know, it's really interesting to see how people outside of the fintech industry see the messages that are coming out from the government and to a degree the mainstream media as well. You know, so that question, John, that you just answered for us, you know, shows that people are assuming, in not necessarily in a bad way, but because of the optics, that the British Business Bank is giving all the lenders this money.
Good.
And then it's sitting on their balance sheets and sitting in their vaults, and they're then going to give it out to other people. That is not how it's going to work at all. In the slightest.
And the next scheme, which obviously we are fully supportive of, and I don't think having working Nick designed it, is that the idea is that the loan company, Cashflows, originates the loan, it sends the money to the customer, and then calls upon it to actually Clearbank to then fund back. So therefore, we have back-to-back facilities. Yeah. We got skin in the game because we're guaranteeing it back. Customer doesn't guarantee the whole lot, and guarantee a portion of it back to us, but they all need skin in the game. Now that absolutely delivers to the marketplace. 500,000 loans, £5,000 or £10,000 loans to 500,000 companies would put 5 billion into that market straight away. And that's the kind of thing that we want to be talking about.
So Lawrence, thinking about sort of optics and that, obviously the story that came out on the BBC and in the FT this morning from the Chancellor, he's considering the 100% guarantee. That kind of goes against what everybody around this table, who I would say is representing the fintech and the lending industry, is going against. Why do you think the government will succumb to that? Are they looking at the populace response, or are they actually looking to industry experts to give them the reality?
Well, I think it's an attestament really to this group and the momentum over the past couple of weeks, but it's a conservative government, and in the constituencies, many small business owners will be bothering their MPs. So John, I don't know in the APPG how many MPs actually are part of that, APPG are listening. For those of you that don't know, APPG is an all-party parliamentary group that has some degree of influence, certainly in bringing together members cross-party and cross-house. But, this is a particular issue. And then I would say this, you're just all too nice saying, oh, it's not about bashing. Nobody wants to bash anything. I'm an analyst, but you need to punch. And we're in a really difficult time here. We need to get first aid to the patient. It's dying. We've got thousands of patients dying. And again, we're going to the ones that have money and saying, well, look, we've got a voice, we're moving things along. I mean, I just think we need to ratchet it up, and tsunami is the word that keeps coming up. I really do believe we've got an impending humanitarian disaster. And so 100% guarantee, I love the comments from these panels. And again, I'm not going to be the arbiter of discretion here, but what I will make a point of sewing up in this discussion is that debt instruments and traditional or conventional debt instruments in a time of financial crisis aren't particularly appropriate right now for the reasons that a number of people have mentioned. My income line has just been taken out. Number one, nobody can tell me when I'm going to be able to go back and try to restore my income line and open up my high street shop. It could be weeks, it could be months. And then following opening it up, the ramp rate and how long the effects of a global pandemic, which I think we are going to probably take some time to get through, are unknown. So the economic consequences and scenarios, which I'm working through with MIT and the economics team right now, I tell you, it's nuts. And for those of you who love economic models and are model freaks, most of them don't work very well anyway. Just the impact of stopping the economy and how quickly things are going to be coming back are important. So one of the numbers I paid attention to, I love it yesterday, Bloomberg said, look, do you know they calculated that it would have been a 3.4 billion annual cost for governments to have been prepared to deal with this pandemic that apparently a number of people have been raising, but again, we've all been asleep at the wheel. And now we've got at least a 1.4 trillion bill. And so back to the discussions here and the point we're faced with, I think that in addition to looking at debt instruments, we should be looking at equity instruments. We should be looking at taking a more risk-adjusted, longer-term approach to helping our small and micro businesses. We should certainly be looking at forgiveness schemes. And Nick and I were speaking about this sometime last week. And again, Bernanke and Tim Geithner really did a good job in 2008. Bernanke had studied the great crash of '29. Everybody was reading Galbraith at the time. Now they're reading about what other countries did through pandemics throughout history. But between he and Tim Geithner, the focus was liquidity. And Tim Geithner said even about the banks, we can't take away treatment or try to kill the patient when they're on the ground. We need to get them support. And that was getting liquidity into the system. This is a bit different though. It's unprecedented again, and we don't know how long we're asking our smaller businesses to stay out of action or when they're going to come back. So the idea of a combination of equity with debt to get a skin in the game, but with some sort of forgiveness in what is an unforgiving forbearance system, would be helpful. And I think Nick's view is that particularly if we look at more of a U-shaped recovery than a V-shaped recovery, there's probably a period of time that would be good for us in the G20 to coordinate some sort of relief so that we can get liquidity in right now to keep things going, but then we can write down a portion of it and take it back out when we see the shoots of recovery coming.
I think that's a really interesting point. I mean, without, we don't have endless amounts of time, unfortunately, to discuss this. One of the things that I was going to sort of mention on the back of that is obviously the Future Fund, which I'm sure we've all heard about, a massive £250 million that is going to be available. Again, very tongue-in-cheek presenting that. It does say initial, to be fair, but that's going to be administered by the British Business Bank as well. I was going to sort of bring that to Sam as well. Given the 37 pages FAQ for the CBILS, which has come out, 2 months or 4 weeks, 6 weeks after the effect, how the hell do we think that future fund is going to actually support businesses with a non-debt based sort of support?
I just don't know. I really, I'm at a loss. I mean, the thing with the Future Fund, I think the idea is great. I think a lot of the details still need to be worked out. I think, what I'm seeing already is that some of the elements of the scheme look like they're going to be very, very heavy from an administrative perspective, paperwork, applications, process. And we're asking the British Business Bank to pick up and run this scheme as well. And by the way, they're already overburdened trying to deal with all the stuff under CBILS. So I just don't quite know how that's going to work.
I think that was the only response any of us could have come with, really. I think when I saw it announced on the 20th of April, having worked here, in government with various things like ERDF funding and various other things, the money comes with about the same amount of cost in administration and processing. So kind of, yeah, I greeted that with a lot of skepticism myself as well. I'm going to go to a couple of questions because we're kind of running out of time. So one of the questions that's come through from an anonymous person said the CBILS has been brought to light to help support micro SMEs. How come products like merchants or business cash advantage were never included or thought about? And apparently that type of product exists in the US. I've not personally heard about it myself. That has been specifically designed, and I'm assuming it's very much of a sort of a cash handout to businesses directly from the government. Any sort of comments or experience that people have had on that?
No, I think the confusion there. Merchant cash advance is an advance on your card payments. So therefore, people like Elipses, for example, probably one of the better known brand names in that, Catalyst and others. So therefore, what clearly is happening for those businesses that they've been funding retail businesses, because that's really primarily those who have a lot of high sort of card payments. And I was speaking with Rob Stratford last night, who was the CEO of Elipses, saying just how things have really gone badly for them right now, because obviously they're all closed. Half of the business they deal with are closed. So again, we've been trying to put this forbearance piece up to governments and alternative lenders. We're having to automatically give forbearance because those businesses are closed. We don't want to go suddenly chasing them or closing them because that's not what we wanted to do, but it's not being addressed. So again, similar overdrafts. There's no such thing as an overdraft. We just Cashflow provide a replica overdraft. That's not considered either. But again, because of national time, they do need to be addressed. And what we do need is to make government aware that, and that's why, again, with Nick and Simon, we're trying to say, look, can lenders not lend how they normally lend? So therefore, we do an overdraft product and there's a term loan, merchant cash advance, invoice finance. There's a whole plethora, and that's the beauty of our sector. There's umpteen different ways we're able to help businesses. But what's important is that we're allowed to help those businesses who fit our sector, fit our segment, and fit our product type, as opposed to saying, here's a one size fits all, lump it or like it.
Yeah, and we
I
just
think
have
I think the issue with that, Mark, is it comes all the way back to liquidity. If Sam and John have got to go to the wholesale markets and pay 10% for the money they're lending, they're not going to be lending that money at 7% for very long. They've got to make a margin on it. They've got to make a return. They've got to cover their costs of onboarding. They've got to cover their bad loans, all of the various other things out there. So the only way to activate the whole of the alternative lending market is for the government to provide some liquidity to it directly via the route that we propose to them. That takes the logjam out. It delivers to Sam and John liquidity that they know that they can use to make lending decisions that they are capable of doing, to accelerate distribution of money into the UK economy now.
Sam, you had a comment on that as well, I think. Sam.
Oh, sorry, yeah. Sam, you go first.
I was going to just respond to the comment on the different product types. And I was going to say, the thing is, we have to remember with CBILS that it was basically evolved from a prior scheme, the Enterprise Finance Guarantee Scheme,
yep,
which was not really ever envisaged to be used with these types of products. Yes, you've got invoice finance, but that's about as close as it gets to anything in this question. And it's just not designed for that product, is all I was going to say, you know. So it's another round peg square hole. You could absolutely do something with those products, and as John said, I think the woes of those lenders are going to be slightly different and nuanced anyway. Let's support them in a different way, create something that's fit for purpose, rather than trying to adjust the CBILS scheme to make it work for that circumstance, because you're just going to be adding more woe and more complexity to something which I don't think will actually give the right outcome.
Sure.
Simon, was similar sort of comments you were going to make?
I'll look super quick. I mean, funding options, we deal effectively with all of market, all products. So we've seen the pain from, you know, across the panel, across all products. What we're hoping with the consortium that we've been pushing this week is, you know, for the likes of Liberis, ULend, who do distribute the merchant cash advance product, we're hoping that whatever product it is that could be sanctioned by the government is something that they could also distribute, because you know, the beauty of the fintech lenders, if we can call them that, is that they can pivot, they can repurpose, and they still have all of the distribution connections in place. They have that infrastructure, so you know, they can also be involved in the game and help distribute that wealth very, very rapidly. So it will be all lenders that we can bring into the fray.
Okay, cool. I was going to ask Nick to answer this question that we've had in from Barry James. It said that we've not mentioned about the FCA engagement, which I think we obviously alluded to. You've had some conversations with them. Maybe you can elaborate on that a little?
No, I can tell you that the FCA is fully aware of what's going on. And I can also tell you from written communications I've got that they are trying their damnedest to help. They're one part of this. You've got, you know, the regulators don't unfortunately lend money, because if they did, I would be trying to ask Chris Woolard, who's the interim CEO there, and I hope he gets the job, to basically send a check fast to Clearbank. You know, there are many senior members within the Bank of England, many people within the FCA and the payments regulators who are aware of the issue and trying to come together to help this. And it goes back to the point I kicked off with. It needs to be a collective yes to move this forward. And I believe that it's getting there. We've been in direct contact with the Treasury. We don't have a yes today on our scheme, to be clear. And we might get a no. They might come up with another scheme, which is even better. And if they do that, I have to say that I'm certain I and the other panelists here would all give them a round of applause for that, because it's action that we need, not preference as to whether somebody's right or wrong.
Yep. I'd agree on that, absolutely. So I think we're coming up to an hour. I know we could probably go on for another hour or so, but I'm going to sort of wrap it up now. I was going to go to each of you and ask for sort of a final thoughts sort of section. There's the one question that came in quite early on in the conversation from Stephen Lim, which I think is really poignant for this final bit, which is, you know, finding funding distribution is the current challenge, the current issue. How are we, FinTech, once we've solved that problem, how are we going to use this to restart the economy after COVID-19 and after the pandemic? So maybe you could put a bit of an idea of future words. Once we've saved this current problem, how are we then going to save the more long-term problem? And maybe we'll start with Lawrence, if we could.
Well, you know, again, as the priorities unfold, and again, I think the attributes of the system, we all agree nothing was designed for this. None of us are really prepared for this. So it just helps to be honest, and then, you know, certainly not bash, but let's be objective about realizing the severity of the situation. You know, number one, in the context of small business and you know, micro businesses, get this consortium up, government, and get the scheme running. Nick's right. The FCA, Andrew Bailey's supportive of it. A lot of people understand this. get exactly what it is this group has done great work in proposing, and that the Chancellor is even using his 100% risk analog as paying attention to this space. You know, good job, but we need to move fast. Get it done next week. 2, you need to get a community of fintech folks and folks like this together to then start working on the second wave, which has more to do with forgiveness, has more to do with how we get an equity stake or use tools other than debt, or how we might structure the debt proposition a bit better. And I think Nick's point about the system being gummed up between the wholesale market and how these funds get to smaller businesses is probably one of the most important lessons anyone that would have paid attention to any financial crisis should pay heed to. I think longer term, outside of the 36 to 60 months that we'll probably face with dealing with this, we need again, a group of very agile people who are thinking about the longer term fund, because the economy is going to change. I read a YouGov poll saying people want to change. We want to transition to a different, more sustainable, economy after this. But it's going to involve everyone coming together, working together, but thinking very differently about things and just not using the same thought processes around particularly credit and risk that we do right now.
Thank you. And maybe move on to Sam after that.
Sure, yeah. I mean, future economy, lots to say. Look, we have to be aware that pre-COVID, a lot of SMEs really struggled to get what they needed from their banks. I think we have a huge, huge opportunity here, because if we can come up with a solution that enables the full finance sector, the non-banks, to also participate, play an important part with access to wholesale markets to get the right type of service, support, funding to SMEs, then not only do we create a solution for the very short term, but we also ensure that the non-bank sector actually has a much longer term future, so that when we emerge from the coronavirus issues in the market and the economy wants to get going again, actually you've got a very broad sector that's still there and able to support it. And that's what we need. We need to have a solution that not only works now, but unlocks that capital, unlocks the balance sheet scale, the capacity, and the inclusivity that we desperately need for all SMEs, including those that are sat in these left behind communities, of which we know there are many. Let's get the funding sorted now. Let's see it play into the future over the longer term, so we've got a better outcome when we emerge.
Wonderful. Thank you very much, Sam. Simon, would you like to comment on that?
Yeah, so building on those two perspectives, I think there's a couple of words there. You've got inclusivity, you've got the whole of the lender community, the whole of the ecosystem. Lawrence talked about together a lot. I think one of the observations, if you step back from all of this, we probably thought we got it right about 3 months ago. We probably thought, fintech in the UK, fabulous. SME lending, yep, we've got far more competition. Look how great it is, and obviously that innovation and competition has grown over the last sort of 10 to 12 years coming out of the GFC. What's happened with COVID is somebody's put one of those huge great lights and shone it on the sector. And actually, I think that what that's revealed is some pretty serious fragmentation and maybe polarized views across that broader sort of community. And at the sort of government and public body level. And I think that's been really, really important. So what we want to see is, if this were, heaven forbid, if there's another crisis in the future, the immediate reaction is, let's get representatives from the whole ecosystem on a video call, round a table. That would have given the likes of us, John, Sam, Nick, Lawrence, everybody the opportunity to say, well, hold on a second, you've forgotten about all of this huge area of the market that could be brought in to help here. So that's the most important thing that we want to see come out of this. John alluded to it earlier. So we have put together a proposal for what we're calling 111 for Britain's businesses, which is this centralized triage information signposting service. If something like that is implemented, certainly our vision is that we would, by purpose, be, our meaning to be would be to serve the whole ecosystem. So we would bring in every single player. We would look at every single type of mechanism that's available across the industry. So I think a service of that nature can really help with this. But going forward, it's got to be together. It's got to be the full ecosystem, and I'm sure we can be successful.
Wonderful, thank you, Simon. John, some final thoughts.
Just two quick things on this. Number one, definitely the FCA is engaged. So this morning, Jonathan Davison, was the Executive Director of Supervision, absolutely was nodding and in agreement that we need to be part of a solution. There were over 100 MPs and Lords on this panel this morning, so absolutely they got the message. With the forbearance of the rest of the team here, what I'd like to do, if that's okay with you, is actually read out to you the speech actually made to all these 100 MPs, so you can actually see what it is they heard to, because if we think it's a good idea, we can actually find and get a hashtag behind it perhaps, or some sort of movement that we can actually get out and about. So with your, it takes just 1.5 minutes because I timed it, I'll let you know what it is. Okay, so you go. So Captain Tom Moore, an inspiration to all of us. May 1940, 80 years ago next month, men just like him faced disaster from another enemy. Hundreds of thousands of British men and women at risk of perishing. But a plan to rescue them was executed in less than 10 days. The mission was rescue, make safe, then rebuild and make better. Dunkirk, as we know, it wasn't just a handful of big boats that saved those soldiers. No, the small boats played their part as well. In fact, a very important part. 2020, we have another Dunkirk. Hundreds of thousands of businesses need rescuing or will perish. We need to rescue them by providing immediate short-term cash flow. We need to make them safe. Once safe, we can work out how to mend and rebuild. But it's not a handful of banks that are going to save them. We need the smaller non-bank lenders to be part of the rescue mission, just as the lifeboats, little boats did 80 years ago. There are lessons to be learned from history. Will this be another Dunkirk success to save the small businesses of the UK? Or should we live to regret a missed opportunity to protect our communities and your constituents? This is a logistics, distribution and liquidity problem. The funds are available and there is clearly a will. We just need a better and different execution. Logistically, the main banks cannot process hundreds of thousands of applications in weeks. They have their own staffing and logistical challenges brought on by COVID-19. Non-bank lenders, even on the Silver scheme, will struggle to raise funds to distribute as the wholesale markets have dried up. We as NBLs have a relationship with over 1 in 3 of all micro businesses in the UK. We could satisfy and deliver that problem immediately. We need a new Project Dynamo. So remember, rescue, make safe, mend and rebuild. There will be a post-COVID country to make great once again. I think a hashtag or something along the lines of, Dunkirk spirit, save our businesses or whatever else is something we could actually try and put to the market to let people understand how urgent. And again, we've done it in the past, we can do it again.
We'll get Lawrence on the case for that. He's really good at coming up with naming conventions.
Yeah, that's right. But just that actually, because I read that at the very beginning, it was referred to 3 or 4 times by both Stephen Jones, the FCA, the FLA. So it actually resonated. So therefore, again, we just need to get them to start thinking about what we're doing.
It will resonate.
I'm sorry, I don't want to interrupt, but I just have to say that the godfather of fintech sounded much better than the plumber, which is how Nick refers to him when we're out doing global conferences. And I love the plumber because it's got like a Tarantino.
I just see him in a Mario Brothers sort of costume each time that I think of that.
The chair, mate. That's the chair.
Exactly. I think that's really great, John. And I think the reason why I think it probably resonated quite well with government is coming back to Lawrence's point of optics. They very much took this approach of wartime when it came out with pandemic. So I think, it's a really smart idea to align the message with that sort of concept because, they're predisposed to thinking of it in that way, I think.
Yep.
I'm just conscious that obviously we want to hear some final words from Nick and then we're going to wrap this thing up. So the final bit is all yours, Nick.
All right, well, just to add to John, he will recall that in Dunkirk, the government paid for the diesel.
Yeah.
That's the liquidity that we need now.
Correct, yeah.
So it's identical.
There, but yes.
Yeah, I'm talking to Stephen Jones this afternoon. I will point out to him where the fuel tank is.
For sure. he was quite supportive, to be fair, very supportive.
I think standing back and looking at this just for a few seconds is that I actually don't think life will go back to the way it was before very fast. And I actually think that we've just gone through 5 weeks of global education in relation to all things digital that we could never have imagined would happen. You know, the fact that grandparents can now talk to their kids about technology in a way that they never understood before is remarkable. If you look at the way people are now working from home and businesses are restructuring themselves and all the rest of it, right? We don't need to follow the old norm of having offices and traveling and all the rest of it. And many businesses that I'm involved in via my portfolio are actually now actively planning not to do that and to take out some 20 to 25% of their costs, all right, which they had because everybody else had them, but now they know they don't actually need them. So I think there's a whole refresh going to go through how businesses are set up, how they operate and all the rest of it. And, you know, if getting to grips with CBILS for the large banks is a challenge, getting to grips with lending to completely virtual businesses is going to be an equally large challenge, which we need to overcome. But I think for the near term, I think we all need to recognise that we're in for a massive period of change. I think it was 6 weeks ago, Lawrence, you and I were sharing graphs when I was in Switzerland. And I believe that a certain publication, I think the word is spiked, wasn't prepared to go ahead with the document and the article that we were penning at the time, because unfortunately it was too inflammatory, because it talked about the rate of growth and the potential for, unfortunately, death in what was then being just called coronavirus. We hadn't got to COVID-19 then. And sadly, that graph and that work that we did those 6 or 7 weeks ago actually has panned out as true. So I think people on this call know to a degree what they're talking about, but equally can help drive forward and out of this crisis. We've got a solution in front of the Chancellor now that helps with the fuel to the little boats. And we just need a yes on that. And, let's get on and do it.
Really excellent. I think that's a really, really good point to sort of finish on. I think, we are all in this together. It is going to be a solution that we can all play a part in, and we all have our jobs to do. Just wanted to thank very much our audience for joining us today and to providing some really good questions and some support from that. Thank you so much to all of our panelists for giving up your valuable time. It's very much appreciated. I think working on this together, we can elevate and amplify this message to the people that need to hear it. And hopefully over the weekend, we'll have some really good news come out that will push us another step forward in this. So just a final shout out for everyone to continue on Twitter to use the hashtag FinTechsSaveUK. I'd really like everyone to also join. Hopefully next week on Tuesday, we're going to have some update and we're going to have a whole new range of positivity to celebrate in that webinar next Tuesday. So from me and from the panelists to the audience, thank you very much. And to everyone, thank you very much for joining. Thank you.
Thanks.
Cheers.